Welcome to another infographic instant with Brian Michael. In this episode, we're going to be looking at the extent to which emerging markets have the greatest promise or potential to act as pension and insurance finance centers. Before we talk about the infographic, we should note that pensions and insurance companies, they tend to generate a large amount of surplus cash in the case of pension funds, because individuals need to pay cash in order to receive the money later as a pension, and insurance companies because of the large pay-ins that they receive in order to pay out whenever somebody has a catastrophic event. In the case it's catastrophe insurance, in case of a death, injury, in the case of various types of insurance. So smart companies, whether they be pensions or insurance companies, will keep a large amount of cash at hand, and they certainly won't pay all of that cash out in any one time or in any short period of time. And hopefully they'll generate enough return in order to pay back shareholders or other members in case it's not a shareholding company. So let us turn our attention now to the infographic and see which markets are potential stars in terms of investment in pensions and insurance. We see that there's basically two types of countries: those that have relatively high pension fund assets as a proportion of GDP, and those that have a high insurance company assets as a proportion of GDP. So just eyeballing it, we see that Brazil, Argentina, Mexico, and to a much lesser extent Indonesia, those companies have pension funds whose holdings constitute a fair percentage of GDP. In contrast, countries such as India, China, to a lesser extent Turkey, these are countries that have insurance company assets that are much more developed than pension fund assets. So, in fact, stepping back, we see two trends in the data. First, we see differences in the proportion of insurance company assets as opposed to pension fund assets. And so this, of course, targets aspiring shadow bankers. And the other trend is the development or underdevelopment in both submarkets. So, for example, we see that Turkey and Russia are much less developed overall than Brazil and Argentina, taking the volume of both pensions and insurance into account. Now, as we discussed in a previous infographic, there's two ways of looking at these data. There's the incompetence view, which argues that some countries' policymakers are incompetent to develop these markets, and therefore aspiring shadow bankers should just avoid markets that have underdeveloped pension and insurance assets. The other approach is the upstart view, and that argues that policymakers are slowly coming around. There's usually political events, macroeconomic or banking catastrophes, other events which have delayed policymakers from putting in place the practices which will develop these two markets, but they just haven't done it yet. So in this view then, aspiring shadow bankers absolutely want to jump into markets like Russia, Turkey, and Indonesia as they develop these two markets. This has been another infographic instant with Brian Michael.